Ladies and gentlemen, good day and welcome to Dilip Buildcon Limited Q4 and FY24 conference call hosted by Essential Technologies Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Jill Chandrani from Essential Technologies. Thank you, and over to you, ma'am.
Thank you, Sagar. Good evening, everyone. Welcome to Dilip Buildcon Q4 and FY24 earnings call. From the management, we have with us today Mr. Devendra Jain, Managing Director and CEO, Mr. Rohan Suryavanshi, Head Strategy and Planning, and Mr. Sanjay Kumar Bansal, CFO. Before we proceed with the call, let me mention the standard disclaimer. The presentation that we have uploaded on the stock exchange, including the interaction in this call, contains or may contain certain forward-looking statements concerning our business prospects and profitability, which are subject to certain uncertainties, and the actual results could differ from those. Now I request the management to take us through the key remarks, after which we can open the floor for question and answer session. Now I hand over the call to Mr. Rohan Suryavanshi for his opening remarks. Thank you, and over to you, sir.
Thank you, Jill. On behalf of the whole DBL family, I'd like to welcome all our partners here who have come here for our year-end call on this auspicious occasion of Akshaya Tritiya. The results and the presentation have been uploaded on the stock exchange, and I hope all of you have had a chance to look at it. So today I'd like to start with some data on the industry, just getting straight into business. So for FY2023-24, as per the government data, MoRTH has constructed 12,349 kilometers of roads, registering a growth of 20% year-on-year. This roughly translates into 34 kilometers per day of road construction. While the execution was decent, on the awarding front, there was a major fall this year, and it stood at a total of 8,581 kilometers. This slow awarding was primarily because of this being an election year, and as we have seen in all the election years preceding this, if we look at the trend for the last 5 elections, it's been the same trend that the election year has a slow awarding. But we expect this scenario to now improve significantly in this financial year, and expect the second half of FY24-25 will be quite heavy in terms of ordering from all sectors of the government. Now coming to the company, in FY23-24, the company won orders worth rupees 3,602 crores, which obviously was lower than expected for the reasons that I mentioned. Of this total orders, 42% of the projects are in irrigation, 35% in water supply, 15% in roads, and 8% in urban development. Now, over the years, as part of our risk mitigation strategy, we have reduced our exposure from the road sector to a great extent. In the pre-COVID year of FY20, it was 65%, and in the current year, it's at 37%. This speaks of how we have prioritized on diversification and expanded our business vertical from purely the road segment to other business verticals such as irrigation, water supply, urban development, metro, special bridges, mining, tunnels, etc. All these diversification strategies that we have done sectorally and geographically have provided DBL a strong footing in all these areas, and as ordering has kept on increasing all these sectors, we are very optimistic of accomplishing targets that we're setting for ourselves this year. I'm very happy to report that when we spoke last year, at the end of last financial year, I said that we are looking to reduce our debt by 800 to 1,000 crores. So I'm very happy to say that we have reduced our debt this year by rupees 861 crores through our various initiatives. This I'm talking about the standalone level. What this translates into is now the net debt to equity ratio stands at 0.29 times. This in the COVID year was at almost 0.8 times and when COVID had hit. And if I talk to you in terms of net debt to EBITDA, now we are almost at 1.15 times net debt to EBITDA. This obviously shows our company's commitment in fulfilling our promises and our focus, as I mentioned, on debt reduction. I'm happy to report that in this financial year, in FY25, we're targeting to further reduce the net debt by at least 500 crores plus. Now, as the year goes, we will keep on seeing in how we need to more look at our target or reaffirm it. But we can safely say this is a target that we are putting. Now, moving on, let me also update you on some of the other deals in the company. Let me start with the Alpha deal. In this year, the company issued warrants worth rupees 533 crores to Alpha Alternatives, out of which Alpha has taken 25% as are the rules for the warrants, and the company has received 133 crores. The rest of the money, as per the guidelines and rules put forward by SEBI, will need to come into the company by June 2025. In the same deal, in terms of diversification, and I mean divestment, the company has divested 26% in 3 HAM assets to Alpha, in which we have received about 130 crores. In this financial year, we will be divesting 26% in balance 5 HAM assets, through which we are expecting 508 crores as money to come. This money is expected in the first half of this financial year. Now let me focus on our coal business. In Siarmal coal mine, in this financial year, the company has overachieved its target by more than 40% by extracting over 7 million tons compared to our target of 5 million tons. For the next year, we are planning to achieve production of 15 million tons compared to the scheduled target of 10 million tons. So we are expecting almost 50% of overachievement in next year as well, based on the current run rate. In this mine, in the next 4 years, the total extraction will be about 80 million tons cumulatively. And from the 6th year onward of this mine, we will be extracting 50 million metric ton of coal per year. On the other coal MDO, in the Pachwara mine, we have delivered 4.6 million tons in this financial year as per the agreed terms and as based on when we started this mine. The next year target is 7 million tons, which is the full year target, and we are on target to deliver that too. So friends, when I spoke to you at the end of last session, I had mentioned, and earlier as well in this financial mentioned, we are now gearing up for DBL 2.0. And I explained DBL 2.0 is how we have in the post-COVID era aligned our company strategy, our focus towards us building a stronger and more stronger DBL, which can withstand any kind of external unseen problems such as what we faced in COVID. The two parts to that were, we will have our short-term business, and then there is the long-term revenue business. In the short-term business will be our EPC business that we continue to do. In the long-term strategy, there are two things that the company is focusing on. The asset business, where one is the coal MDO assets, and the second is the InvIT assets. So there'll be, in 3 years from now, there'll be 3 different powerhouses for DBL. One will be the EPC company, one will be the coal MDO powerhouse, and then there'll be the InvIT powerhouse. The InvIT and the coal will assure long-term revenue visibility for DBL. In 2 years, as our coal InvIT gets completed, we are expecting 400 to 500 crores of free cash flow coming from the InvIT as dividend and principal repayment back. Besides that, the coal business will also be providing a good cash flow and a visible cash flow, which gives us visibility from current to the next 25 to 55 years. And the EPC business will be our short-term business, which will keep on giving revenue on a regular basis. Our aim is to become a net debt-free company on a standalone basis within the next 2 years. So FY25 and FY26, we will be a net debt-free company. Our focus is on generating free cash flow, which is what we are doing, and reducing our debt through that. Our focus is on improving our return on equity and our return on capital employed. I'm very happy to report that if we look at our return on equity, where we, on as a core basis, where we minus our investments into our assets, it has jumped from 6.9% of last year's ROE to 13.8% ROE this year. Our focus will be to keep on enhancing this. And same goes for return on capital employed. Our focus is also to mitigate concentration risk across sectors, across lines, and across geographies. So we are also building our order book accordingly. All these different actions that we are doing have also facilitated in the enhancement of the company's credit rating. We are happy to report that CRISIL has reaffirmed its rating for the company and also improved its outlook to positive. So we are also hoping for an increasing rating for the company in this financial year. And that trend should continue even the next year as our debt keeps on getting paid down and as our cash flows keep getting stronger. Friends, now I'd like to hand over the call to our CFO for the financial overview.
Thank you, Rohanji. Good evening, everyone. I welcome all our stakeholders to our earnings call. Let me present the results for Dilip Buildcon Limited for quarter ended 31st March 2024 and financial year 23-24. During quarter 4, the company has completed 4 projects, and on yearly basis, company has completed 9 projects worth 7,400 crore. During FY24, the company won total projects, 6 projects worth 3,602 crore, and during last quarter, company won 2 projects worth 961 crore. Now, moving from business to financial performance, quarterly performance, quarter 4 FY24 versus quarter 4 FY23 YOY basis. The company's revenue increased by 2.5% in quarter 4 24 versus quarter 4 FY23. This is due to better execution of the projects. The EBITDA increased by 29.56% in quarter 4 FY24 on YOY basis from 272 crore in quarter 4 23 to rupees 352 crore in quarter 4 24. The EBITDA margin witnessed a significant increase by 250 basis points. The EBITDA margin increased on account of higher revenue and reduction in construction material costs. In terms of profit after tax, the profit after tax increased by 112% in quarter 4 FY24 on YOY basis from 58 crore to rupees 124 crore in quarter 4 24. The PAT margin also witnessed a significant increase by 218 basis points. This is mainly on account of better EBITDA margin and reduction in expenses. On yearly performance, FY24 versus FY23, the revenue increased by 4% in FY24 on YOY basis from 10,119 crore in FY23 versus rupees 10,537 crore in FY24. This is due to the better execution of the projects. And EBITDA margin increased by 31.44% in FY24 on YOY basis from 988 crore in FY23 versus rupees 1,299 crore in FY24. The EBITDA margin witnessed a significant increase by 256 basis points. The EBITDA margin increased on account of better execution of the projects and reduction in cost of construction material. Profit after tax also increased 90% in FY24 on YOY basis from 222 crore to 422 crore in FY24. The PAT margin witnessed a significant increase by 181 bps. This is mainly on account of EBITDA margin and the reduction in expenses. Let me take you through some important items of the balance sheet. During FY24, the company surpassed 5,000 crore net worth and reduced 861 crore of the debt. Due to the reduction in net debt and increase in net worth, the company's net debt equity ratio improved to 29 basis points as of 31st March 24 versus 52 basis points at the end of March 23. In terms of debtors also, on 31st March 24, the debtors reduced to 1,392 crore versus rupees 1,606 crore at the end of March 23. Working capital days also improved by 5 days from 70 days to 65 days from FY23 to FY24. Thank you all, and now we can open the floor for the questions and answers. Thank you once again.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you. And congratulations on the 800 crore plus debt reduction. Sir, a couple of broader questions on the guidance front. First, on the revenue. So, what kind of a growth are we looking at in FY25, and if possible, if you can guide for FY26?
Hi, Shravanji. Thank you very much. So, Shravanji, as you mentioned earlier, the book this year, as we had expected, has not come because of the ordering. But as the elections get over, we're expecting a flurry of orders. So, in terms of full year guidance for revenue, I think it'd be a little early to give you what kind of growth because you're also seeing what kind of orders. But even if you want to take a bet, it's like this revenue that we're doing this year, easily we should be able to do that kind of revenue next year as well. Now, how much increase or what growth will come will all depend on how the ordering opens up and how much we win and at what times. So allow us time, and as we move on through the quarters, it would be much better to do it. So right now, you can, like I mentioned, you can take a similar number as we have done in terms of revenue for this year. But as it opens up, we'll give you more clarity on that.
Okay. So in terms of now order inflow, so obviously we have received a much less number in terms of the inflow in FY24. So in FY25 now, how much order inflow are we looking at? And if you can help us broadly, how much are we looking at from the road and that to in a hand? So based on that, let's say whatever the number you will say, so out of that, how much revenue can be expected from that in FY25?
Shravanji, so this year, the total order inflow that we're looking at is 10 to 12,000 crores at least. That is the kind of range that we're looking at. And this is across all sectors that we work in. So on the conservative basis, it's easy to take, you can take that kind of number, that those are the kind of orders that we are kind of looking at. It would be very difficult to give you a split on the different sectors, and it would also not be prudent on our part to be disclosing how much we are targeting where. But we can assure you it will be in all the different sectors we work in, and it will also be a mix of both EPC and HAM. So let's see how the orders come, what we end up winning. But broadly, that's the strategy that has been in the past as well. We will be following a similar kind of strategy.
Okay, but let's say if we get a 10,000 crore and broadly, let's say HAM, obviously the revenue will come in FY26 as the appointed date will take time. So let's say if we get a 4,000-5,000 crore EPC, can we expect some revenue from that? Just to trying to understand what extra growth can come on the revenue in FY25.
Yes, of course, Shravanji, as we win more EPC contracts, you will see revenue coming from there. Also, we very recently won another 1,000 crore contract in the rail segment, railway, so that is also not visible here. So like that will start. So there are different sectors and orders that we are targeting, and based on which ones open up at what time, it will definitely have an impact on the revenue.
Okay. And in terms of the EBITDA margin, capex, how much are we looking at for this year?
So EBITDA, like we've given you a target of last time as well, we are looking at that same 12 to 14% kind of EBITDA targets that I had mentioned earlier as well. In terms of capex, the same 50 to 70 odd crores of capex is what we will be looking at. I'm also very happy to report at the same time that currently our equipment debt only stands at about 180 odd crores. 170 odd crores. Like I said, somewhere in that range is where we are standing, which almost 80% of which we will be paying down in this financial year. Anyways, that is a scheduled repayment. So our equipment debt is almost completely off, and we are on target, like I said, already given you the kind of target we're looking. So by the end of this financial year, our net debt will be less than 1,000 crores.
Okay. And then, our net debt, you are saying will be less than 1,000 crore. So at gross level, we are looking at a 500 crore debt reduction.
Yes, 500 crore plus.
And so next year would be a significant reduction will be there, close to kind of a 1,500 crore, 1,000 crore kind of a number will be there in the next year.
The 1,000 crore number for net, you said net debt?
Yeah, net debt reduction. So
it will be less than 1,000 from where we are targeting.
Okay, got it. And on the working capital front, any further improvement from current 66 days? So particularly on the inventory front, there we are not seeing as such not much improvement. So
Shravanji, basically we are working towards reduction in overall working capital days. What I briefed in the beginning, 5 days improvement from 70 days to 65 days. Yes, on inventory side, more or less it is looking like same. So the inventory levels are same, but overall basis 5 days increment. But individual item wise we are working on. So there'll be improvement quarter on quarter every time. So yes, we are doing that. But it is looking, it is basically coming in the results also.
Okay, and sir, now on other income and finance cost. So how do we now look at the finance cost for this year, FY25, and if possible for FY26 and other income? Why I am asking other income is the stream in which we have received, I think, close to 106 crore as a distribution. So also help me out of that, how much will be coming at the standalone level, and now with the alpha, whatever the distribution we will be receiving, the entire will be coming at standalone, or how it will be?
In terms of finance cost, the finance cost this year reduced marginally because the debt reduction significantly happened in Q4. But the for FY24-25, the targeted finance cost is 350 crore against the 500 plus crore finance cost. In terms of the other income, total from the existing set of stream units, we have already detailed out in the investor presentation. We will be receiving around 94 crore total distribution, and generally the distribution is principal is around 30% of the total distribution. So yes, you can say around 65-70 crore from the dividend and interest, and balance 30% from the principal return.
And this entire will be shown in the standalone other income?
No, basically the limits, the units are held in DBL and DIAPL. So I gave the number on the console basis. So
at standalone level, anything will flow as other income, whatever the dividend we will be getting from the InvIT?
Currently, the numbers at DBL level and DIAPL level is not ready with me. You can connect with us separately. We will give you the breakups also.
Okay. And on the DBL infra date, it is the same 675 crore, or has the number changed?
So 675 crore as on today is yes. We have already started prepayment of around 30 crore. So by next month, this will be reduced by 30 crore.
Got it. And just a clarification on the presentation, the 16 HAM projects that we are showing. So currently, right now, we have 18 HAM projects, and I think the one new that we have received. So Alpha Alternative, we will be transferring the 18 HAM projects, 26% equity stakes. So in the presentation, why we are mentioning the 16 HAM projects and not the 18? So we will be owning the 74% stake in 18 HAM projects.
So you can basically see the breakups is mentioned in the HAM portfolio. You can see the there basically total 18 projects were targeted to be given to Alpha 26% stake. And just a second.
So I was referring to the slide 24, where we have mentioned equity and divestment tracker.
So basically total 19 projects what we have today. 19 breakup is 18 of Alpha and one project we won last quarter. Okay. So out of total 19 projects, 3 projects, 26% already given to Alpha after completion. So total 16 projects as of 31st March, 16 projects were under construction. Out of 16 projects also, 5 projects out of the first bucket, 8 assets bucket is remaining. So out of 5 HAM projects, 2 projects the COD is received. 2 projects COD will be received in June and one in May and one in June. So out of 16 also, 11 projects will remain after you can say June for under construction. So with after this quarter, only 11 projects will continue and 5 projects, 26% will be divested between quarter 1 and quarter 2 of FY25.
Yeah, I got it. I got the point. What I was trying to understand is actual invested equity as on March 24 is 1,265 odd crores. So this is only for 16 projects or it is for 18 projects?
It is 16 projects only, and out of 16 projects, I said 5 projects. 2 projects we already received So basically, you are basically saying the actual invested equity. So it is all 16 projects.
So it should be 18 projects now, because we also own the 74% in the 2 projects we are not mentioning here.
Sir, this 1265 crore is 11 to 16 projects only. So whatever projects we already completed is removed from this sheet. 70.
Okay, got it. I understood. Just a clarification, sir, whatever the remaining 10 projects that the Alpha Alternative will be taking a 26% stake, so there, once we complete the entire project and we will put 100% and then they will invest the 26% and we will get back that 26% cash. That's the way it will work, or we will invest 74% and then 26% invested by them.
We are putting our capital only, and while we have the option, but once the PCOD is done, then we will get Alpha capital into those assets.
So initially we will put the entire 100%, and once we get the PCOD, then we will get back the 26% from Alpha.
Then we'll flip and do that. But like I said, here again I'll repeat that while we have the optionality to pull that money earlier, but we will see. We'll take a call on it as our strategy goes.
Okay. Thank you and all the best, sir.
Thank you. The next question is from the line of Narendra from Robo Capital. Please go ahead.
Yeah, hi, I'm audible.
Yeah, you're audible. So please go ahead.
Thanks for the opportunity. So my first question is regarding the money that we are to receive from Alpha. So what is the timeline for this money? I believe that the 133 crores has already come in, and about 400 odd crores is left from the warrants, right?
Yes.
So when is that expected to come in?
From warrants, 133 crore you rightly said received already in December 2023. 400 crore as per SEBI guidelines under warrants, they can put from within 18 months from the first tranche. So 18 months will be completed in June 2025, around 20th June 2025. So this money Alpha can put by June 2025. So that is why we kept in 2026. This money may receive before because it is optional. They can put it earlier also. So the last time, the end line is June 2025.
Okay, understood. And what about the InvIT money? When will that be coming in?
So investment out of the total 8 projects, the first set of 8 projects, 3 projects we already received 130 crore, and from the next 5 projects, 26%, we will receive total 508 crore, and out of 508 crore, majority money will be received in this quarter, and around 60-65 crore will be received in quarter 2.
So H1 we are expected to receive around 500 crore, right?
Right.
Can I also direct your attention to page 24 of our presentation, where we have highlighted how the money and this will come, so that it will be very simple for you to refer to it and understand how this money flow will be coming in.
Okay, understood. So just a clarity on the deal. So we are expected to receive around 4,000 odd crores in units and 2,000 odd crores in cash, right? Would that be fair?
No. In total, we will be receiving for our 18 assets, our units will be worth about 4,500 crores. That is the rough, I'm giving a very rough estimate right now. Our 74% would be around that kind of value. Besides that, we are receiving the other cash that you mentioned. The cash component has 2 components. One is the warrant money that is coming, and the second is the InvIT 26% money that they're doing. And if you want to refer to the exact all those calculations, I would highly recommend please look at our earlier presentation as well, where we first spoke about the Alpha deal. There we have detailed out how the different cash from Alpha would be coming. And here also in this as well, it's mentioned here in this presentation as well. If you want to look at it, ek baar usme taking it, so it will be very, very clear to you. So once this transaction is completed, DBL will be holding about 4,500 crores of InvIT units. That will roughly translate into 450 to 500 crores of cash flow per year. And this is, I'm talking about the 18 assets that we have sold to Shrimp. For the 18 HAM projects that we sold. So that's what there. So we are getting that cash flow coming from them.
Okay, understood. So the deal multiple would be around 2.5x of the equity invested. Would that be right?
The one way up to देख सकते हो, we have given you the idea of how much equity we had invested in it. That we put in our side. But yeah, there is a good multiple. But if you want to do the exact calculation, look at the cash component that is coming to the company along with the value of the InvIT units that you are doing, and then you can subtract the investments to get an exact. Yeah.
Okay. Understood. My second question is regarding the coal projects, right? So, what are the handling charges per ton, and what kind of margins would be making on that? Hello.
What in the typical MDO project, what happens is we quote a price for extraction per ton. So in both the different contracts, there is a different price that we've quoted and we'll be doing. In terms of margins, it's kind of similar margins what we're doing in terms of EPC work we've directed towards. So those kind of margins is what you should be looking at.
Okay, so it's 12 to 14%, right?
Yeah, mid-teens is what we have guided for that. Yeah.
Okay, understood. So for the Siarmal coal unit, would you be able to give the handling charges per ton or extraction charges per ton, whatever it is?
So the thing is, for all the contracts, there is an inflation component built in, and there is some calculation. Currently, if you want to understand, Siarmal, we are getting about 550 or somewhere in that range of 500 something range of from that. And obviously, this keeps on moving based on certain parameters that the government has set for the contract.
Okay, understood. That's it from my side. Thank you so much.
Thank you. The next question is from the line of Ketan Jain from Avendus Spark. Please go ahead.
Thank you. Good evening, sir. My question is on, so what is the interest rates you're seeing at a project level for financing HAM projects?
now the HEM project financing, because the MCLR of all the banks are close to 9%. So the various banks are basically financing new projects at between 9 to 9.5% in the construction phase, and post-construction it is on MCLR, so around 9.1% types.
Okay, thank you, sir. Yeah, that was my question. Thank you.
Thank you. The next question is from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hello. Good evening, sir. Thank you for so much for taking my question. So most of my questions have been answered. Just two questions, sir. One is, what is the current cost of debt that we have for the debt on books? That's my first question. And second, sir, with the elections coming in, do you see any risk of more orders slow down, or maybe, if the government doesn't form? So what kind of, broad-based risk that you see in order inflow?
So in terms of cost of debt, fund-based facilities, we are around 9.5 to 10% in long-term and short-term both, including all costs. But at the same time, on non-fund, because the EPC business runs on non-fund base, so there are LC and BGs issued. So basically, they are also around 1%, 1.1 to 1.25% cost. So overall basis, we had given guidance of 350 crore overall finance cost for FY25.
Oh, perfect, sir. And so with regards to the risk,
as in terms of election risk that you asked, sir. So, like I mentioned in my opening remarks, election year is always a slow ordering year. And if you look at this detailing from Vajpayee Ji's era to now, every election year is a slow year. But the year after it is usually ordering increases significantly. I can also tell you right now that all the different ministries are working on a very aggressive 100-day plan. So the government is also very focused on wanting to start immediately off the blocks. So once the election gets over and results are out and the new government comes into place, we should see a flurry of orders happening. Even at the NHAI level, there is more than 1 lakh crores of orders that have already been floated. So 1,20,000 crores of orders purely on NHAI and MOS level that have been floated. So there is a huge order line in the road ministry, in railways, in every ministry. So code of conduct, because of that, it's currently stalled. But as soon as this happens, we should see a lot of ordering.
Oh, perfect. So that helps a lot. So all the best, sir. Thank you.
Thank you.
Thank you. A reminder to all the participants, if you have any questions at this moment, please press star and 1. The next question is from the line of Shubham Shelar from IDBI Capital. Please go ahead.
Yes, sir. So, based on the current order book that we have and the delivery schedule that is pegged to that, so what kind of revenue that you are expecting, assuming like no inflow or maybe inflow is delayed, just based on the current order book?
Sir, even if we had zero inflow coming in this financial year, the new financial, even if there is zero inflow of orders, we would still be doing a revenue of almost what we have done in this year. The same range we should be hitting in FY25 as well, the same 24 revenue. So the revenue for 25 is pretty much visible for us. Year going forward after that is where we will be looking at all new orders. The only caveat that I made is depending on how much orders we win immediately after once this does and how the execution picks up there, we can have slight changes to the even the revenue guidance for this financial year. And hence, I mentioned earlier that allow us some time and allow the year to move forward and then how direction it does, we will be able to give a more exact idea about the ordering. Till then, about the revenue. Till then, I think taking this as a base case that this kind of numbers the company should be able to do next year as well is a good starting point.
Sure, sir. And then recently, CRISIL has revised the outlook to positive. So does this also have a bearing in lowering our finance cost, or only the actual rating upgrade that has a bearing on the finance cost?
So Shubham, basically the rating impacts the borrowing cost when it goes to the next category. So we are in A category, positive outlook. So now we are expecting credit rating increase also based on the plans of reduction in debt and all. So we expect when the credit rating will go to next level, then there will be reduction in borrowing costs as well.
Okay. And typically, when this, in the month of April, so this outlook is revised. So after a gap of how many months or quarter, that rating change, they review it. How exactly it works?
Basically, the review they are doing closely, and I think every quarter, but just a second. So sir, basically, this time the upgrade is done after a year, but the review is done every quarter.
Okay. So sorry, I think I just missed. So when are you expecting probably upgrade sort of review? I mean, if I have to put it that way.
So between 12 months, 12 to 15 months, I believe.
From now, right, sir?
From now. Yeah, from now.
Okay. That's all from my side. Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Rohan Suryavanshi for closing comments.
Thank you again, guys, for coming and asking all your questions. In case we have missed out on answering anything, and in case you have more follow-up questions, please feel free to reach out to our team. We'll be happy to answer. I look forward to seeing all of you guys in the next quarter. And hopefully we'll have a more clarity on the order book going forward by then with the government firmly in place. So, yeah, wishing all of you a great financial year ahead.
Thank you. On behalf of Dilip Buildcon Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.